Okay, awesome. Welcome to everyone who's joining us live. We are here with 4 of our favorite lenders. I am Lindsay Dreyer, the broker and owner of City Chic Real Estate, and we are here to talk about mortgages. I think it's a really sexy, exciting topic. So I hope you guys also can bring the sexy because it is really fun. So I would like to start with brief 30-second to maybe a minute introduction. I know mortgage people like to talk a lot. So let's just keep it brief. Don't go all at once.
Hi, I'm Hunter Church. I'll start it off with Prosperity Home Mortgage. I've been in the industry for 10 years in October. This is the only big boy job that I've done out of college, kind of accidentally happened upon it, and very excited to chat through things today.
Oh, that's awesome. Real estate's the only big girl job I've had, and I'm celebrating 19 years this month, which is bananas. All right, Alex, why don't you kick it off next?
I'm Alex Jaffe, and I live in Washington, D.C., and I work for First Home Mortgage, and I've been a lender for 16 years, and the bulk of my business is in D.C. and the counties that touch the district. And I love what I do, and I'm excited to share that joy with all of you today.
Awesome. Thank you. Leslie, you want to go next?
Sure. Thanks for having me. My name is Leslie Wish. I'm with Fairway Independent Mortgage. I live in Arlington, Virginia. I've been a mortgage lender for over 35 years and still love what I do. It's a great, great industry to be in, and I love helping people. So
that's awesome. Hannah.
First of all, hashtag goals,
I know, right?
Is incredible. My name is Hannah Katz. I'm a loan officer with Annie Mac Home Mortgage, and I've been in the industry for 7 years.
All right, so we have a breadth of experience. I'm so excited that you all are here. We got a lot of good questions from our registrants, and we'll roll through a few of those. And then I also have a few questions of my own that I want to ask you guys. But I think the biggest thing on everyone's mind right now is WTF with interest rates. What is going on with interest rates? So we just had them go up a little bit. What? I thought they were going down. So what do you think is your hot take prediction on where interest rates are going in the next 6 months?
I can start.
Okay.
So I think after listening to a lot of the economists and industry experts that all of us listen to, we are anticipating interest rates to come down probably in the next 6 to 12 months. Interest rates they highly track with inflation, and the inflation numbers have been coming down. They're starting to see some of the jobs numbers come down too, which is all indicating that interest rates should start to decline. Some of the experts we listen to are saying in the next year or so, we might be seeing rates as low as 5%. But again, those are our predictions. We did expect to see rates come down a little bit sooner than they have this year. They're being a little bit sticky. But I do believe, and I do predict that we will see a good last half of this year or into next year as far as interest rates go.
Okay. Your money's on Q4, Q1.
Yeah.
All right. Perfect. Who wants to go next?
I want to echo that. I also think it'll be really starting to come down in really towards the middle of next year, and then we'll really see some relief. I also want to say that I feel like the industry leaders that have been predicting the decrease have been doing so for a long time. It's been an idea that everyone has had, okay, based on the numbers, we're seeing they should be coming down, and it's been the same prediction for at least a year since they really started to hike, because of the idea behind inflation and where it's been going and where they're trying to make it go, thusly then the interest rate. So I think the kind of piece I want to say is I feel stability in the idea that it's been predicted that way for quite a while now.
Yeah, but can it happen? Maybe just a little bit? No? Do we have to wait? Is it going to be a
That'd be nice.
Christmas and Hanukkah present? Maybe?
I hope.
Great. Hunter, Alex, anything to add on there, or do you just want to spit out your prediction?
Yeah, my prediction is going to fall in line with kind of what everybody else is saying. That we're going to expect some sort of relief, ideally in the next 6 to 12 months. Just for historical perspective, a lot of what I was telling people in 2020, 2021 was that industry experts were saying that nothing was going to happen besides rates go up, and they were wrong for, I don't know, 5 out of 6 years. So exactly what the timetable is going to look like is tough to firmly predict. But the idea right now is that as those inflation numbers, as those job reports kind of come back and provide the indicators, that is going to be the best metric for where interest rates are going to go. So fingers crossed for that next 6 to 12 months.
All right. Alex, anything to add?
Oh yeah. So for some data, Fannie Mae, who won an award for being the best economic forecaster of all the forecasters last year. Don't ask me for the name of the award, I forgot, but they think that interest rates they won an award. They think that rates will be 6.2 next quarter and averaging 5.9 next year.
Okay.
And the next question is, well, how does that relate to where rates are now? Well, rates are like mid upper sixes. And rates have been mostly in the sixes for the last 13 months. And so that's why all of my colleagues are saying that rates are gonna decline, and that's probably what's in our future, unless they're.
Yeah, interest rates is definitely a hot topic with our clients, and a lot of them are sitting on the fence waiting to purchase when rates go down. But really, it's a supply demand thing. If affordability comes back because rates go down, more people are pulled into the market, and we don't have enough homes right now to satiate demand. So I think if you can afford a home at 7%, yeah, it would be great if it was at 5.25, or, oh gosh, I don't think we'll ever see 3.5 in our lifetime again. Sorry, people, but that was a good heyday. But that brings me to the point of another question, which is refinancing. So there is a lot of mystical, magical talk about refinance out there. And I'm curious, when do you think it makes sense to refinance? Like, how much of a difference in interest rate? Is it the length of time you plan to own the home? How do you evaluate if you should refinance or not?
I typically always start with the length of time. I think that's the most important factor in determining anything financial, to be honest, because how long is my investment is going to determine what kind of investment I'm trying to put attention on, whether that's a house or stocks or, a CD or whatever I'm trying to do. So I really think that that's really the first question you should be asking. And then from there, there's a cost to refinancing. You can't really get around that, especially just in terms of title fees, for example. So if there's a cost, what is the delta savings of that cost versus how much you're saving per month if you're doing like a rate and term situation versus the amount of time you're going to be left in the home. So that really has to make sense. There are lots of different reasons to refinances, though. Some people consolidate high interest debt, in which case sometimes your mortgage payment's going up, or getting out of an adjustable rate mortgage, for example. So yeah, there's plenty of different reasons, but I would say typically we start there with the length of time.
Yeah, there's a misconception out there, because I don't feel like we've been in a super refinance market for a little while, but I think there's a misconception that refinancing is free, and refinancing is not free. There are closing costs associated with refinancing. So that's where I think that comes into play, which is if you're only owning the home for an additional 2 to 3 years, the cost of refinancing probably isn't going to make up the monthly payment difference. So it makes sense if you're holding something long-term to have that lower interest rate. Let's dive into Ariam's question. So I'm working to be a first-time home buyer. Congratulations, that's so exciting. I still think buying a home is such a good idea. Would 5% be an ideal interest rate? And I think that this is something that a lot of people wonder, which is, we just hear like, I should wait until they're in the 5s. But when you're thinking about buying a house, how do you decide if you're financially ready? How do you decide if you can afford it? Is it based on rate? Is it based on payment? Is it based on your income? What do you guys suggest in terms of the best time to get a mortgage or buy a home?
I think that home ownership when you're a first-time buyer is an alternative to renting. And So you're just deciding, should I buy now or should I wait to buy? I think anyone would agree that owning over time makes more financial sense than renting. And that's because you're going to gain equity over time. You're going to have more wealth, with your home, with a value of a home much higher than your loan amount. And so really it's an alternative to renting. So when are you ready to buy? Well, I think it's someone who can commit to a property for a few years, because there's closing costs when you buy and when you sell. So if you can afford home ownership, and if you're going to have the property for longer than 4 years, I think it can make sense. Now, whether you are financially ready for home ownership, that takes a conversation. But as far as, are you ready to become a homeowner or not? Can you commit to the property for 4 years would be my first question.
Yeah. Leslie, I want to bring you in because you have probably seen a lot of people in your 35 years of mortgaging. What are the top 2 or top 1 mistake that you see first-time home buyers make when it comes to getting a mortgage?
One of the mistakes they make is they call and say, hi, I'm ready to apply. I just paid off all of my debt. So a lot of times people think that they have to pay off their credit cards or student loan debt or cars or what have you, because they want to look as good as they can to the lender. And I'll say, well, when did you do that? Oh, just the other day. Well, when you pay off your debt, it's going to take at least 30 days to work its way through the credit bureau reporting system. So that when we run a credit report, which is part of the pre-approval process that we use when we look to see if somebody qualifies for a loan and be able to show them the options that they might want to consider. So what I tell people is, especially being a first-time home buyer, it's really hard to save the money that you need for a down payment. And there is a misconception that you need more for a down payment. A lot of times people think they need 20% when the minimum down payment for most programs is 3%. Mm-hmm. So I tell people, if they say they're thinking about it, don't do anything until the lender, one of us, can take a look at your whole financial picture and then determine, is the money better spent to pay off some debt because you need that to help you qualify, or to make your payment, total outlay more palatable? Or is that money going to be better used so that you have money to pay your down payment and closing costs? So definitely, before you make any moves that you're not sure about, you definitely want to have a conversation with a lender. We need to talk through, and then we will give advice based on your individual situation.
I think that's such a great point, because a lot of people think that they need to have that lender conversation when they're ready to buy a home. And I actually think the sooner you have that conversation, the better off you are, because there's some clients where they have the conversation and they have a 2-year plan in place where they have to save money, or they have to make credit repairs, or there's just a bunch of things. Maybe they need 2 years of tax returns because they're self-employed or something like that, where it's so beneficial to have that conversation in advance. And all 4 of you, you're here because you are not pressury salespeople. I recommend you contact any of the mortgage people on this panel, because they're all so friendly and so helpful. And that's why you guys were invited, is because we love you and you take good care of our clients. So that is a big piece. Is it is never too early. I can't preach that enough. It is never too early to have that conversation, because we have a lot of people who realize they can make homeownership happen sooner than they thought, or maybe they discover a credit thing that they need to repair. So just getting your ducks in a row earlier is so beneficial. So whether it's you're looking at next month or in 3 years, I think having the conversation with a lender is so crucial, because you just need to see what your options are. It's so personal. So I think we're on the first time homebuyer kick right now, which I love. Hunter, what is your favorite first time homebuyer program?
So when I got into the industry, I worked with a former business partner of mine, Brad Katzen, who's a top producer at our company, top producer in the region, and to kind of, figure out the industry, he tasked me with really learning about the down payment assistance programs. So one that I worked a lot with was the Maryland mortgage program. And I found that their process has become a little bit easier to work with compared to in years past. So in my experience, that's been probably one of my favorite ones to work with, just because they have a wide span of different down payment assistance products available. So offering it as, 0% interest deferred loan. So you're not making any actual payments based on different actual amounts. So $6,000, $5,000, so on and so forth. And they also offer grant programs. So the only downside with most of these programs that you'll find is that for some of them, they determine their own interest rates on a day-to-day basis. And it's kind of the strings attached to any down payment assistance or first-time home buyer program is that usually to get that no strings attached down payment assistance, it's going to be factored into the interest rate. But just in terms of process flow, working with them and just the various options that they have to kind of figure out what fits the mold for a buyer the best, that's the one I've had the best experience with.
Okay, awesome. Alex, I'm going to bring that to you. What's your favorite first-time homebuyer program?
First-time homebuyer programs are usually set up by local government to help buyers buy without a down payment. And they come with assistance in the forms of loans or grants, and sometimes below market interest rates. And I'll talk about Montgomery County HOC, which is where our office is. And HOC has below market rates, and that comes with forgivable down payment assistance, which is 3% of the purchase price. And that program, also what Hunter mentioned, there's similar stuff in Virginia and DC as well.
I don't know. I think Maryland's doing a little bit of a better job than DC and Virginia. No offense, but that's just my opinion. I like anything that's forgivable. Let's be real. I don't want to have to pay it back. That's really nice. Hannah, how about you?
Oh man, I don't want to answer this one for another program that I think I'll talk about, touch on in another question that I think I saw mentioned in the email, but I would have to say I really like, I'm just going to say it. Our first-time homebuyers struggle a lot with competition, especially when we have Maryland Mortgage Program, because a lot of the time listing agents have misconceptions about how difficult those are, how long they take. Even if you as a lender are very good and can get it done, sometimes that hinders you because you're disclosing it on the contract as a Maryland Mortgage Program offer, or any kind of, down payment assistance first-time homebuyer program. So there's other programs that exist that can help with competition in different ways. One of them being AnyMax cash offer program, which can help you make an offer in cash for free. And that's probably one of my favorites because first-time homebuyers are at a real disadvantage. So, I mean, of course, that can't be combined with Maryland Mortgage Program. So if you're a first-time homebuyer that happens to have the cash that's saved up, that's ready, but it's still finding that you're losing out because you don't have quite enough cash to be some of those people that are like, oh, I can waive everything, including the appraisal. If you're not quite there, there's other ways you can make your offer more competitive for sure.
I mean, that brings up a good point. We can shift to competition. So it's definitely on my list. So what are ways that you feel like you can help personally in your seat at your company to help people be more competitive in this market where you're seeing people having to waive financing and appraisal? Hunter, I want to hear from you.
Yeah. So I'm pretty sure that everybody on this panel is going to have a very similar program available, but just the general idea of a pre-flight through underwriting. So our program at Prosperity is called the Buyer Advantage program. So again, everybody's probably got something very similar to this, but the idea is that we work with the buyer up front, gather all of their financial documentation, send some initial disclosures based usually on the high end of what they think that they're going to do, knowing that they can scale that back afterwards and submit that loan to an underwriter. So the end goal here is that when you go through a standard pre-approval process, you're just getting a pre-approval letter, which says that, yes, I've provided this documentation to the lender. They feel comfortable based on XYZ purchase price, down payment, so on and so forth. So going through this pre-flight through underwriting helps to make sure that an underwriter is actually getting their eyes on it. So instead of just having a pre-approval letter, you can have a conditional credit commitment letter. So something that is generally not something that you're going to receive until 14 days, maybe into the actual loan process, helps you look that much more attractive to a seller and to a listing agent. And a good lender is going to be able to call that listing agent, kind of explain things up front and say, hey, look at what a great job this buyer has done. They're this much further along in the process. They're an absolute slam dunk. And that can help to give that buyer a lot more I guess, comfort in being able to waive things like a financing contingency, or potentially, depending on how competitive they want to get, waiving an appraisal contingency. Also allows for closings in 10 to 14 days instead of, say, 20 to 30 days.
Yeah, so typically, just for the people who are first-time buyers on this, usually your loan goes to underwriting after your contract is accepted. So what has become very commonplace is your loan can get pre-underwritten. So before you go under contract, when you're getting pre-approved, the lender can actually send your loan through underwriting to make sure that you're good. Like, they know that they're going to approve you. We definitely have seen lenders that we do not recommend that have completely blown up purchases for our clients because everything falls apart because they actually underwrite it after they're under contract. And luckily they have a contingency in place or whatever. We rarely have ever had anyone lose a deposit, but it is really good to find a lender that does pre-underwriting. So Alex, Leslie, I'm guessing you guys have that too. Okay. Anything else like creative that you guys can think of that you've seen, like, to help people be competitive?
We here at Fairway have a great program that's kind of an add-on to what Hunter just talked about. So I'm not sure what everybody else on the call here has, but we have a program called the Cash Guarantee Program. And that happens after a buyer has been put through the underwriting queue and after they have met all of the underwriting conditions. So once that happens, then we submit their file to our corporate office and they create what's called a backup addendum to the contract. So that when the realtor, Lindsay, when you or Brittany or whomever submit the offer to the listing agent, you submit it with the backup contract that basically says, we are so confident that this buyer is approved and will sale that if for some reason, due to financing reason, they lose their job, they've gone out and bought a boat, now they don't qualify anymore. Any type of financing reason like that, if the buyer can't complete the sale, Fairway will step in and purchase the property from the seller for the sales price or appraised value, whichever is less. Or if the seller says, hey, I want to relist my house because I think I can get a better price, Fairway will pay them $10,000 and walk away from the deal. So that allows a buyer to compete very well against a cash offer and, against other offers in general. And that helps us if we have a buyer who's using, for instance, the VA loan, or if they are a 3 or 5% down payment and they're having to compete against people putting more money down. So it comes in very handy in a lot of these situations, and it has helped a lot of our buyers to be able to succeed and win a contract where they might not otherwise have been able to.
So Hannah and Leslie, you both offer a similar program. And is it only for conventional and VA loans? Like, can you do it with FHA or no?
It sounds like Leslie can do it with VA and conventional. The program I have sounds like sort of similar to that, without the $10,000 or walk away situation. The difference between our programs in effect or like in actual competitive offer terms is probably incredibly similar.
Yeah.
Except I don't know if your offer is marked like this. Our offer is marked as a cash offer with proof of funds, with basically an addendum that states we will purchase it in cash on this date, period. And then our buyer is actually closing a loan behind the cash, if that makes sense. So it's like, it's sort of reversed in that way, marked as a cash offer, but we don't have that $10,000 guarantee or walk away. So it's kind of cool to see that we have a similar program, but that it seems like we both have different advantages. I can't use FHA with mine though. Can you use FHA with yours? That's very cool.
That's really cool. That's
really
awesome.
cool.
Alex, I'm sorry to put you at the back. Do you have anything cool? I'm just kidding. I think you're great.
Thank you, Lindsay. So here's what I say to buyers. The majority of my clients who make offers, and by the way, I'm one of the top 10 lenders by volume in the district and loan officers by volume in the district. The majority of my clients who make offers do so without a financing contingency and or an appraisal contingency. But that's a conversation that has to happen. And getting there requires both a conversation talking about your finances openly and in detail, asking the questions that need to be asked, and then gathering all the documents. And then
Exactly.
having time to review them and ask questions after that, review. And
I think, yeah, the takeaway from all of this is that each person's situation is so specific to them. So having a conversation with 1 or 2 lenders or 3 lenders to just get an idea of what's going to work the best for you is really important. And the other thing is it's also property dependent. So that's where the team that you've assembled, your real estate agent who should be able to help you out with the whole strategy of how to win the home and everything. We have the lender who's going to be able to lock down the financing. We have our home inspector to make sure the home's not a piece of garbage. Like we want to have this like dream team that's going to make sure that you're protected and that everything is going really smoothly. So I think that's the takeaway is like, make sure you have somebody who's excellent and is going to get the job done. That is 100%. I don't care which lender you use. I just want to make sure it's someone who is amazing and is going to not mess up you getting your dream house, because we have seen it happen time and time again. And it makes me so sad when people don't listen to us. Say, we've worked with them, they're horrible. And they go with them anyway, and then they have to cancel their contract and they're very sad. So listen to your realtor, people. Use a lender that is great because it is so, so important.
Lindsay, can I just?
Yeah. You can do whatever you want, Leslie.
You brought together some very, very good top-notch lenders here today. And what I try to recommend to people, because a lot of people, they think that they've been conditioned to think that they have to find the lowest interest rate, but interest rates change every single day. And so what I tell people is do your due diligence up front, just like you said, talk to a couple of different lenders, find out who you're most comfortable with, who you feel like will work in your best interest and isn't going to be pushy and all that, Alex, Hunter, and Hannah, and myself. And we really want to help people and educate them. And then ultimately, the interest rates are going to be very competitive. So lenders, for the most part, are going to have the same interest rates day to day, very close. So it's important to find the connection that your realtor recommends, that you end up happy with, because that's the person that's going to take the best care of you and see you through to closing.
Exactly. And if you have a 5% interest rate and they don't go to closing, it doesn't matter. Like, it is all about getting you to closing on the house that you want with a monthly payment that you feel comfortable with. And it isn't always about the lowest rate. We see it really frequently with credit unions. They are not able to get the job done. There are some very large, I will not name names, but lenders that are quite popular. I will say that they advertise a lot on the television. You will see them all the time, but those are people that I don't necessarily recommend to my clients. And so it's definitely important to be using someone who is super, super knowledgeable. And I also recommend local. Local is really important because real estate agents understand that real estate is local. And when you're submitting an offer with a local lender's information, that looks a lot better than someone who's based out of California or Michigan or Florida. So that is really important that they understand the local atmosphere and the local market. I just feel like that's another important point. You can absolutely get a list of the lenders. I'm going to also drop in the chat their info. I'll have you guys do that at the end. We had one question, which I thought was an interesting one and something I'm very passionate about, which is investment properties. So I know that with FHA loans, you are able to finance up to 4 units as long as you live in one of them. That is correct, right? Now, can you count the rent from the 3 other units as income towards your qualification? I love all these heads nodding yes. This is making me really happy.
75% of the rent of the units you're not going to occupy can be counted. It's only 75% because 25% is lost due to the vacancy factor.
Right.
Meaning if they might be vacant. So we only give you credit for 75%.
That's still really great.
But that would be true on a FHA or a VA or a conventional, but FHA is still only 3.5% down on a 3 to 4 unit property.
Mm-hmm. Yeah, that's, as someone who has built a little monopoly board of rental properties, I love, love, love this strategy of buying your first place, living in it for 2 or 3 years, and then renting it out, and then moving on to the next one, and the next one, and the next one. It is the best. Like, can't recommend it enough. So if you are looking to build your little real estate empire, we have agents who would love to help you do that, because I have a few that have done it already. Let's talk about appraisals. So what are you guys seeing with appraisals? Are they coming in low? Are they coming in high? Are they funky? Are we in a weird spot with them right now?
I'll start on this one.
Yeah.
For the most part, and I'm sure it's probably the same thing for all I keep saying this, for all the lenders on this panel. But using local appraisers really makes a difference. So you'll hear about some of those bigger banking institutions where somebody from Northern Maryland is coming in to do a DC condo appraisal, and it just doesn't necessarily make sense. So in 2020, 2021, when properties were escalating well over the value, appraisers had a tougher time finding comparable properties. But at the same time, it's kind of a supply and demand type of thing. So if there's 15 offers and they were all willing to escalate X dollars above the price, that kind of also speaks to a value. So today, where there's less of these properties that are having 15 to 20 offers on them, we're seeing that the appraisers are having a little bit of an easier job, and definitely the timing has been a little bit more attractive. Because appraisers were going out and seeing 20 properties a day, now that they're only seeing a few a day, helps to make sure that those reports are getting back to us a little bit faster than usual, allows us to write those shorter appraisal contingencies into contracts to, again, make buyers look a little bit more attractive. Are
you seeing, you see a big volume of clients, and I think that that's like, you guys are boots on the ground, and I've always said, like, mortgage lenders are like leading indicators, because you guys are seeing like how many people are getting pre-approved, how many people are making offers on things, and like we see the tail end of that. So are you seeing acceptance rates of offers going up, staying the same, or going down as compared to like 6 to 12 months ago?
I feel like that depends on like literally the specific neighborhood.
Yeah.
And also obviously the programs and terms. I mean, it's really hard to say. Some people want to be competitive and understand what this market can require in certain places. And then other people either don't have the means or don't want to be competitive, thinking that it's not something they have to do. So I think that's a really variable question. What do you guys think?
I think that there are weeks where I have 4 buyers go out, 4 of them write offers, all 4 of them win. And then I have scenarios where 10 people go out and somehow not a single person wins. So to your point, it can be whether it's rainy outside, whether you had to drive uphill in the snow, if you woke up on the wrong side of the bed. I'm not really sure.
Yeah.
But some weeks it's really good. Some weeks it's just a little bit tougher.
Yeah. Alex, you pointed up. What did that mean?
Acceptance rates are way up.
Okay, I like to hear that.
It's really exciting. Whereas a few months ago, I used to write a letter and expect the buyer not to win.
Yeah.
And lately, the last couple of months, I expect them to win. And I haven't done the data on it, but it's meaningful. The acceptance rate is way up.
That's great. Are you seeing like a commonality of property type? Like, is it single family, townhouse, condos? Is it across the board? Like, are you starting to get little micro data there?
Across the board, acceptance rates are way up. For some reason, my condo buyers in Virginia cannot catch a break and cannot get a property under contract. But the other property types, they're doing well. Now, that said, Hannah, if you've got a buyer who agreeing with you, okay, if you've got a buyer who wants to buy a single family house in Bethesda and wants to put a contingency on their contract, they're going to have trouble.
Yeah.
But of course, the city chic realtor and the loan officer will help them put their best foot forward.
Yeah, there's definitely still, we're seeing micro pockets of intense competition, and it's definitely, I feel like it's the move up for sure, like moving up from a condo or moving up from your row home. So I definitely think like that longer term house where you're staying in it for 10 to 20 years, I see the competition's pretty fierce on that, mostly because they're just not building a lot of them. And millennials are a big generation. So, and they're making babies right now and they want those homes with good school districts and all that stuff. So I think any of those type of neighborhoods definitely are seeing competition. Leslie, anything to add on that one?
Yeah, I would agree with everything that they said. There's some weeks where we see a great, acceptance rate and other weeks where there's nothing. But as far as the pre-approvals, I feel like buyers have kind of come to terms with where rates are. And so the buyers who have, feel like they can afford, they want to be pre-approved and they understand that they might have to give, 4 or 5 tries even to try and get a home under contract, depending on what the competition on a particular home is going to be. So I think it's definitely very home specific, area specific, and then just kind of the luck of the draw, for that particular home.
I agree. I think it's just don't give up hope. It really can sometimes just be the buyers that you're competing with are all at the beach that weekend and you're the only one that rolled through. We see that a lot in the summertime, especially and during the holidays where everyone left town and you're the only one left. So I know I have purchased a home that way where it should have had 10 offers and I was the only one in town Thanksgiving weekend. Who lists a home on Thanksgiving weekend? That was dumb, but I took advantage of it and got a house. So you just never know. It really is like, I think there is a aspect of the right home finds you when you are ready. And you kind of have to have a little bit of faith that the right house will be there when the time is right. So let's talk about credit, because I know that that's come up for a few people. We had some like really exciting news where the credit bureaus were dropping some medical collections or something of that nature. Does anyone want to elaborate on that a little bit more?
I would say saw it, but not necessarily educated enough on it just yet to speak
Okay.
on it intelligently.
I think it's like something if they pay it off, it's automatically removed or something. Instead of just being a paid collection, it must now automatically be removed from your credit report. I think.
Yeah,
But
so
I also am not.
Hannah's
Yeah.
right.
There's like a huge hype about medical collections and that they were going to be dropped off people, like millions of people's credit reports. And I was like, I didn't look into it any further. And I was hoping maybe one of you did.
Yeah, Hannah's correct, and Hunter is also right. It hasn't happened yet. So yes, what you heard is correct, Lindsay. It hasn't been implemented yet. The mortgage credit scores are off of FICO models that haven't adopted these changes yet, and they're coming. And I forget whether it's 2024, 5, or 6, but it's coming.
You know what? If they did it in 2024, that would help a lot of first-time home buyers. And I really hope that they get their act together, because we have definitely met a bunch of people where credit is the only thing that's holding them back right now. They have money, they have the ability, they have a job. It's just credit score that's really the hindrance, which is a bummer. So all right, I'm gonna put a little.
Yeah, I mean, if you have a collection that you've paid, especially that you've paid, but if you have a collection and you pay it and you're able to get what's called a deletion letter from that collection agency, and ask a loan officer that or I mean, you could even do it yourself, but it might be easier for a loan officer to do it. We can submit that to the bureaus and get that removed and do something called a rapid rescore, where we can get your credit updated very quickly instead of it taking, 30 to 60 days for the bureaus to do it on their own time. If you're in a time crunch, a loan officer can certainly help you improve your credit in that way.
Yeah, that's another reason why I think contacting someone far in advance is so important, because you guys have that modeling software available to you where you can say, like, if you put $100 towards this or $100 towards this, like what makes the most sense, what will help my credit the most. So not only are you guys mortgage wizards, but you can also be little credit score wizards, which is pretty amazing.
I'll also add, I think for most loan programs and the others on the call, the other lenders may have programs that will vary from this a little bit maybe, but in general, the minimum credit score you need to get a mortgage loan is 620 for most loan programs. Sometimes you can go a little lower than that. We don't have any programs at Fairway where you can go lower than the 620. But there might be lenders, any of you, I'm not sure about that, but otherwise, you know, that's pretty generous there with the 60.
Mhm. I've seen 580 in the past. I haven't seen it recently. Do any of you offer 580 or higher?
We do, we offer 580, but honestly, it's really, it can be pretty expensive when you get to that range. A lot of the time, it can make more sense to pursue credit repair in some form or fashion to get to that 620, because the 620 is like the magic score that like really makes the home buying more affordable, in my experience. What are you guys seeing, Alex and Hunter?
Was going to echo those same sentiments that we do have a product that will allow for as low as 580, but oftentimes it's going to require some fairly strict compensating factors. So being able to show additional cash reserves after closing, lower debt to income thresholds, things like that. So it's definitely a good option if somebody is really in a pinch, but oftentimes it's going to be a little bit more difficult to qualify for. So
Mhm.
620 is definitely going to be that magic number.
Okay.
Echoing Hannah on the 580 being possible, but it is there's more underwriting, you know, requirements, and by the way, every 20 points, and this is true for all of us, all four of us, 600, 620, 640, 660, and so on. Every 20 points opens up more options. First time homebuyer programs will start at 640 or 660.
What's the max? Is it 760 and then anything above that is garbage? Or like, because I had someone be like, well, I have to be over 800 to get the best rate. Is that true?
It depends on the product. So some government loans, VA, FHA is 720. First time buyers, 680.
Okay. So
If
720 is like, if you're over 720, you're getting the best rate. Like you're considered the best.
it's only like very small specific jumbo products where 800 would make a difference. Otherwise, for everybody else, it's 780 is top tier.
Okay. 780 and above. Life goals.
Yeah, and then I feel like 720 to 780 is sort of like incrementally different. I don't think it's typically drastically different.
Yeah.
But you might be looking at maybe the same rate costs a little bit more, couple $100, couple thousand, whatever it is. You might be seeing like these incremental changes between 720 and 780, but I certainly agree. I think 780 is going to be top tier pricing.
Okay, awesome. Any other questions from our participants? Go ahead and type them in the chat, or you can just go off and get your face on camera too, or go off mute. We love that. My margarita's almost gone, which means this party's almost over.
I didn't know we were bringing margaritas.
Oh, it's happy
It's the
hour.
memo.
Oh, sorry. All right, I want to end on like kind of a fun light note. So I think that first time buyers in particular are kind of discouraged. I would also say some real estate agents are feeling a little discouraged too, because the market is just like there's not as many homes available. It feels a little sad right now. So I'm going to give you 30 seconds to a minute to give your best client pep talk. I want you to give the best pep talk possible. I'm going to start so you can get an example of, because I'm brave, I'm going to do it. And then you're going to have to go. All right. Hey, first time home buyer, you can do this. You have the power. There are programs out there, and buying a home is a very smart investment in your future. Whether you want to be a landlord or not, you are putting money every single month into your piggy bank of equity. And if you can get in today, that is when you're going to start building that equity. So I highly encourage you to contact one of these lenders or all of them to see if it's possible and if it makes sense for you. That's my pep talk.
I gave this one to a client the other day. I was pretty proud of it. So there's never a right time. There's never a wrong time. There's just time that you're getting into the industry. Because if you were buying in 2020 or 2021, you would feel incredibly discouraged to have been competing against those 15 to 20 offers. Whereas today, yes, interest rates are a lot less attractive, but you do have that kind of light at the end of the tunnel, being able to refinance. So if you're comfortable, or if you're, kind of at the high end of what you're comfortable with on a property right now, imagine what it's going to be like if you're able to get 1%, 2%, 3% lower on that interest rate in the future. Then you've made this very wise investment now, and you're going to really pay off in the future.
Yes.
Great points by both of you. I think it's excellent. And inventory is low, which means there's not a whole lot of homes to choose from. And that's just the reality. And there's buyers competing for that shortage of homes. If you find a property that you really love, you want to put your best foot forward and buy it. And if you can afford it, you should do so. Homeownership, we can send you lots of data, makes sense over time. It'll be great for your wealth long term. You can live there, and in the future you can rent it out. Hunter, agreed. You can refinance it. It really is an important financial decision. It's our job to get you prepared to be able to make that decision when the house comes up that you want to buy, and then also support you in the offer to buy it. And we'll help you understand the cost for that home, and you'll decide whether you want to pursue it. And you won't buy a home unless you really love it, because why would you?
It's so true.
Echoing everyone here, Hunter and Alex, and Lindsay, I think like that's also true. I mean, it might take some time. You might feel disappointed sometimes, but it's so worth it, both financially and emotionally. You have a stable place to live. You don't have a landlord behind you saying, well, this year I'm increasing your rent by $200, $300, whatever it is. Sorry, figure it out. It's pretty stable, right? And so it gives you like an emotional security to have that. I mean, not even talking about financially, although we could talk financially, that the average homeowner has 40 times the net worth, 40 times the net worth of a renter. There's no question that typically it makes sense financially. So if you're feeling discouraged in this market, know that you're fighting the good fight, and you can make it happen with enough time and patience and with the right team behind you. So that's all I have to say about that.
I love it. You got this. All right, Leslie, take us home.
Right now there is a lot of opportunity in the market. So even though inventory is low, which is being dictated by supply and demand, and we anticipate that to happen over the next couple of years, inventory is going to be tight, home prices are going to go up, but there's still opportunity there. So as long as we can get you, in the best position, pre-approved, understanding the numbers, as educated as possible, you might have to take a few tries at trying to get something under contract, but ultimately you are going to end up in the home that you're supposed to be in. I've seen it over and over and over again, people getting discouraged and then coming back and saying, I'm really glad I didn't get those other homes. I'm in the home I really want to be in. And the opportunity is get in the home when it's the right time for you, when it's the right house, get it under contract. Even if rates are a little bit higher, you'll have the opportunity to refinance in the future when rates come down. But for those people that want to sit on the sidelines until the rates come down, they're going to be competing against a lot more other people who are going to jump in at that time too. So get the house now, refinance it later, and you'll just sail into your future and you're going to be as happy as can be. So it is a lot of opportunity right now. So
I love all of this positivity, because I think so much of what's out there is just doom and gloom, like life is horrible, we're in a recession, everything's bad, interest rates are the worst, there's no homes. Like everyone's just like, there's just a lot of negativity because that's what sells and that's what gets clicks. And we all live this day to day. We're all making people's home ownership dreams come true. And it is amazing to be able to help people make an investment, find a place where they're going to grow as a human, as like grow their family if they choose that route. But it really is an investment in your life and the life that you want for yourself. And so it's not just a house, like it's your future. So thank you guys so much for coming. This was really wonderful. If you wouldn't mind dropping your name, email, phone number in the chat, any other contact info. I will make sure that we get that to everybody. And this was just great. Thank you so much.
Thanks for having us.
You're welcome.
Thanks for having us. The vibes of this were incredible.
Oh,
Yeah, love this.
I'm all about good vibes. Let's do it
Cheers
again.
to everybody. So, well, there we go. There it is. There it is, my picture. Cheers to everybody.
It's nice to feel like camaraderie too between all of us. Like it's cool to see other perspectives and hear the same sentiments echoed and different things like that. It's like cool. We're kind of all in this together, you know. It's nice.
I think we really are. And I think that even the real estate industry in general, like a lot of times people say it's competitive, but I do think a lot of times it's very collaborative. We're all in it together. So we're all experiencing the same thing. So it's nice to not feel so lonely. And I think that's the case for our clients too. Like they want to know that other people are experiencing those things too.